Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Consensus by CoinDesk in Austin, Texas. And joining me for this segment, we have Hayden Hughes, who's co-founder and CEO of Alpha Impact. We're going to discuss trading along professional investors. Hayden, it's great to have you with us. Welcome to Trade Talks.
Jill, thanks so much for having me.
You got it. Before we get into that, let's talk about the market overall. Of course, digital assets, along with the rest of the asset classes, saw a lot of the volatility from the beginning of the year. What's your thoughts on what's driving these market movements?
Sure, look, I think we've seen a sell-off across asset classes, obviously led by the perception that interest rates are going up and just going to keep going higher. You saw the inflation numbers come out last night and it was unexpectedly high, 8.6%. So I think the one change I've seen over the last few years is that crypto is now becoming more of an institutional asset. So institutional ownership of crypto means that institutional asset managers view crypto really as an extension of their risk-on portfolio. So they treat it in many ways like Tesla or a tech stock. So when times are tough, they tend to sell, and that's caused a lot of selling pressure.
You know, it's almost a double-edged sword because the industry wanted to get that institutional adoption, and with that comes institutional management. Your platform allows retail investors to follow expert crypto traders. How has that worked in the crypto bear market?
Sure, look, I would hesitate to say that it's been a lot of fun, but we actually have a significant number of our traders on our platform who have managed to make money in the bear market. And of course, one of the most popular features that we have on our platform is the ability for our users to actually plug in their existing exchange accounts. So what that means is that our users who are using FTX can use futures, which are very popular. You can go long and short and use leverage. Of course, that needs to be used with care, but we've had some of our traders, I think our top guy, his username is ASCIIWay, for those that are watching of our users. He's made about 900% over the last 90 days. The number two, I think, made close to 300%. That's Crow Boss. So we've seen a lot of swing trading of the volatility. You have assets that are trading in a predefined range. They just go up and down and up and down. So it presents a lot of exciting opportunities for those traders who our users can copy.
At a recent keynote presentation, you predicted the risk of a possible Lehman moment for crypto. For those of us who have been trading or in the industry for quite some time here, we know what that means. That's a pretty substantial statement. Tell us more about that.
Sure, so I think there's really a risk that's becoming more clear now. When I made that statement at the keynote a few weeks ago, it was I was a little bit ahead of some other commentators, but effectively there are a number of products in the market that are centralized lending platforms, companies like Celsius and Nexo and BlockFi. Now I'm not making any comments about any individual one of those companies, but what those companies end up doing is paying customers an interest rate for those assets. So customers lend assets to those institutions. So what we end up seeing is that customers lend assets, these platforms pay an interest rate, and of course they have a massive treasury of client funds. A lot of those client funds have been locked into staked ETH and other contracts that mean that if there were, heaven forbid, a run on the bank, they may not have the actual liquidity to cash those users out, which would cause a crisis of confidence. There's also the UST debacle, I suppose we could call it, where some of these institutions may have actually put client funds into UST, which meant that they could be massively underwater. So the risk is that there are some of these centralized lending protocols that have billions of dollars of client funds that in a negative market scenario would actually cause clients to withdraw funds, and there may not be enough left to actually cover all of the withdrawals. So my thesis that I shared at that conference was that would cause a crisis of confidence that would cause even more withdrawals and an even bigger death spiral, and it could even affect the USDT peg. So I think USDT is legitimate, or as legitimate as they come in crypto, but any crisis of confidence with massive withdrawals from lending would surely impact USDT, which would cause a further crisis of confidence. So I would hate to say death spiral, but it's certainly a possible scenario.
Right, well, we had the conversation a couple of weeks ago. We saw what happened with that. What's been the most resilient trading strategy among the Alpha Impact traders? You just said someone was up 900%, another one up 300%. What's working?
Sure, so I think there's really two buckets. And I guess the first strategy overall is traders who are actually in the red right now, who are accumulating, knowing that these assets go through these predictable cycles. So they go down and they go up. So I think a lot of our traders over the long run are really positioning for success because they're acquiring some of these assets really on the cheap. But the really lucrative strategies has been the swing trading. So as I mentioned, there's a ton of volatility right now. The CRO, the Crypto.com token, even Ethereum and Bitcoin, the ETH-BTC pair, there are a lot of different assets that kind of go sideways, but they go sideways within a predetermined range that you could really spot if you zoom out on the chart. So some of the best traders on our platform are trading using futures. They're going long at the bottom, short at the top, up, down, up, down, up, down. And we've seen really effective use of the futures on our platform, so that's been where it's came from.
Tell us about your new product, the Traders 100 Club.
Sure, so the Traders 100 Club, we have a subset of our clients who are, I guess, in the high net worth category, and they don't actually just want to copy our users' trades. Our platform connects expert traders to people who want to become an expert trader, and our users can copy those expert traders, but some of our users actually want to talk to our traders. The guy that made 1,000%, for example, they say they want to know how they can use those strategies themselves. So it's really for that subset of our clients. It's for 100 VIP clients and our top 5 traders. So it's a curated community for our top 5 traders to have a close relationship with our top 100 VIP clients, where those VIP clients can get the support from the traders about some of these topics, where to buy, where to sell, limit orders, margin strategy, all that kind of stuff, options, hedging. So it's an exclusive experience for some of our top clients, and we've limited it to 100, and we've had great success so far.
Can't put on a crystal ball on the table, right? When you talk about, what the markets look like towards the end of the year, do you expect more volatility? I mean, it's a volatile asset class, so it's
Sure.
to mature, but what do you think towards the end of the year?
Sure, look, I've been really transparent about the fact that the Fed has inherently become more of a political institution over the last year than really at any time in history. So I think in an election year, we need to be realistic about the fact that A, the Fed wants to do everything it can to actually tamper down inflation, and B, it also doesn't want to destroy the market. You saw what happened in Q4 2018, it just, they went too far. So I think they have every incentive to try to get that balance just right. It's clear that further rate hikes are priced in and going to be coming. Ultimately, we see that the quantitative tightening will continue, it may accelerate, but I think what we really expect from the Fed is that there's going to be a lot of what I would call saber rattling, which is to say they want to position the market in such a way as to expect further bad things to come, to incentivize participants to actually constrain their spending behavior so that they don't have to use interest rates. So we see several months of, I think there's going to be aggressive tightening for the short term. I actually think that liquidity will continue to decrease. We see several months of sideways action in crypto. I actually think there's a case where equities, which are still have a long way to go down, whereas crypto looks a lot closer to the bottom, equities could actually continue to fall while crypto trades sideways or even slightly goes up. So that's a possible decorrelation we're watching. Ultimately, we think about less volume, less liquidity. It will be sideways. I don't think we've quite found the bottom yet. I think by end of year, I would say 70% confidence. October, November, we find the bottom, and it'll be a slow grind up from there.
Yeah, it's interesting because I've also been asking guests on the show, when do we start to see the decoupling of crypto from your Nasdaq 100 tech stocks, whatever you want to call it? And it goes back to your point earlier before that you have institutional managers in there now. It's almost like it's a double-edged sword there because they're going to trade it like they trade traditional asset classes, at least perhaps this generation of institutional managers.
Yeah, absolutely. And look, I think there's different types of institutions. And you've been in crypto, I think, as long as I have. And in 2017 and 18, everyone was saying, we just need these institutions to get here, on the assumption that everyone would be a buy and hold, long only investor. Crypto's actually attracted a lot of the hedge fund, high frequency trading, derivative traders, which has meant that you're right, when the markets are going down, there is sell pressure. However, we do see quite a lot of sustainable buy and hold type of activity. And so I think that overall the kind of short-term investors will at some point run out of bullets to fire. They won't have anything left to sell, and there will be just accumulation left at that stage. So obviously some links with interest rates, but we think there's a lot of upside in the future.
All right, Hayden, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter.